This is the Bliss ETF Marketing Podcast, going beyond the ticker. Purpose-built ETF marketing that drives issuer growth, done humanly with clarity, trust, and honest measurement. Brought to you by Zero Company Performance Marketing. If your ETF marketing feels like perhaps 18 different tactics all duct taped together, or maybe you don't even have a marketing plan, it's okay. You're not failing, right? If your ETF is struggling to grow, what's happening is you're probably missing a playbook. Today, I'm going to cover 6 moves that we see as a marketing agency work over and over again. Now, whether you're launching a brand new fund, restarting momentum, or even want to change the marketing of an existing fund. But real quick, before we get into today's playbook, here are just 3 quick ETF marketing notes from this past quarter and what they mean really when it comes to issuer marketing. First, active management keeps taking share. Now, active is still driving the product conversation that we see today. If you're launching, assume that your audience needs more education, really not more slogans. The marketing implication here is building an education-first narrative, who it's for, what job it does, why this ETF now, and why you in particular. Now, a second note is that conversions and structures actually keep shifting. More firms today are moving existing strategies into ETF wrappers. And what this really means is when it comes to the competition, it's not just new ETFs, but it's old familiar brands with mutual funds now starting to show up in this new structure. And so for marketing, it's really, don't just describe the strategy. What we really have to do is clarify why the ETF is easier to buy, easier for investors to hold it, and then why advisors and wealth managers can recommend it. Another headline that really jumped out at me is this AI managed alternatives leverage headline. The product surface area is really starting to expand with AI alternatives, leverage. So it's more novelty and even more noise. And so as a marketer, your edge isn't just more novelty. It's really what we talked about in our last episode, clarity and trust, right? A very calm story, clear proof points, and a due diligence experience that respects the audience's needs, that it really meets their needs to learn what your ETF is about. But okay, let's get practical. Let's dive into the 6 moves that make up our playbook that we see working again and again. As a reminder, right, ETF marketing is not e-commerce. The journey that we see, it breaks down across different platforms when it gets to advisors and even committees. We just don't have a closed loop in this vertical. And in a very crowded category, great funds get overlooked while louder competitors really tend to win attention. So the goal isn't to do everything. The goal is really to make your fund easier to buy, easier for investors to hold on to it during different markets, and also easier for advisors to be able to recommend it to clients without a bunch of compliance headaches. Today, it's really about build it in a simple way. These 6 moves, no fluff, and honestly, you can copy them and put them to action even today. So one question, though, that you may ask is, which move matters the most if we only have 1 quarter of runway to get something going? And it would be this: fix clarity, fix search, and fix your product page. Everything else will amplify that later. If you only have 1 quarter, you don't get to do everything anyways. You get really to be unmistakably clear. So tighten up that story, make the website do the work that a visitor wants, is confirm, and they're going to take action, and capture the demand that already exists in the world of search. Once that's working, then you can really earn the right to expand. So what's move number 1, though, in our marketing playbook for ETFs? clarity, one rooftop message for one audience. And really what this is for is really becoming understandable very quickly. So here's a checklist that you can use. Who's this for? That one primary persona. What problem it solves in very plain language. Why now? Give them context of what's going on in the markets and not just hype. And then why you as the asset manager? What's the process? What exposures are you going to have? How do you implement the strategy? And then one next step from there, either going to the fact sheet, looking at the holdings, or perhaps looking at a video to learn a little bit more about your methodology. You can't buy your way around a fuzzy story. Now, move number 2 is looking at search and intent, capture what exists. This is really about showing up where validation is already happening. So the checklist here is be very clear around your category, the use case keywords. For example, if someone's looking for a managed futures ETF, or perhaps as we're seeing interest in crypto, right? Really look at those use case ETFs. Are they trying to protect downside protection or a drawdown? Use those keywords to really help capture the intent that's going on. Look at branded and ticker keywords and even defend those. Dedicated landing page, per the intent of your theme. And then one of the things we'll harp on over and over again is really above the fold clarity and just the ability to, in one click or one scroll, do the investigation or the due diligence that the visitor is looking for. Really, search is where people confirm the idea before they ever trade. So you need to capture that early. Now, move number 3 is programmatic for targeted air cover. If you haven't heard of programmatic advertising, the precision that you can get down to your audience is really remarkable with this form of marketing. It's really about what you can get there is disciplined repetition to exactly the right audience. So think about it this way. In your checklist, have maybe just 2 to 3 audiences max. Use creatives, perhaps use 2 creative routes, one that's educational and also one that builds credibility. And then when it comes to frequency, set those guardrails so that programmatic really works when you treat it like a very disciplined, repetitive, not sort of spray and pray type of activity. It's interesting. We sometimes get this question when it comes to programmatic advertising, is programmatic even worth it on a small budget? Well, only if you can really stay focused. And if you have a small budget, this is where it's even more important to focus in on just 2 audiences, use a small number of creatives to confirm what is working, and then get that consistent frequency with that audience. And look at your data and your results. If that audience isn't working within a few weeks, perhaps try a different audience or even tweaking some of your other levers. So yes, if you treat programmatic like a very disciplined, repetition based form of advertising, not just sort of, it's not cheap reach by any means. With a small budget, yes, resist the urge of fragmentation. Pick 1 to 2 audiences, run 2 clear angles, and then commit, for long enough to really build the recall. If you can't sustain the frequency because the budget is so small, you're usually better off, putting the dollars into search and then making sure that your product page is truly set. Now, next move is when it comes to paid social as a distribution channel and retargeting. We like to think about whatever organic channels you are really investing in, support those through paid. And what this is really about, or what it's for, is really amplifying education and reinforcing that story that's a little bit higher up in the funnel, but it's going to bring investors into the funnel. So your checklist here that you can copy and put into play is using LinkedIn for advisor education, retarget engaged audiences, or even building a lookalike audience there. Use short video cut downs. Again, just one simple idea like a YouTube short or a short video to be able to, again, get in front of that audience. And then absolutely make sure that you're using your UTMs in everything. So really, paid social is for distribution with when the message is clear and the audience has been defined, when you really know who you're starting to go after. Now, what about PR? Well, PR is definitely in that trust infrastructure. Third-party credibility that really makes the rest of your paid advertising work that much better for you. So when it comes to PR, what do you need to have? Again, that one very clear rooftop angle or message, who you're for, what problem you're solving, and then why now in particular. And then just have 3 simple links. 1 to the product page, 2 to where an investor can find more information like a fact sheet or your methodology, and then maybe the last link to a recent story for why this fund is good in a particular market. And then just make sure you're using one spokesperson and have them really reinforce that narrative. So PR, right, it isn't necessarily vanity. It is definitely a credible accelerant, as I would call it, to the rest of your marketing efforts and for your ETF. Sometimes we get the question, do we really need PR if we're performance marketers? And this is really what I would say. PR, again, is not vanity. It's a credibility accelerant that makes every paid dollar work harder. You're getting your earned media to work with your paid media. PR isn't, really about getting the applause or that press release. It's really about starting to get that trust and getting your spokespeople out in the marketplace. A credible third party mention gives advisors and platforms a safer reference point. As well, it tends to lower skepticism when someone sees your paid media, right? It really reinforces it and helps to build that trust. Think of PR, again, as being in that trust infrastructure that helps everything else to convert. And if you're able, with the PR agencies that you work with, to get backlinks, this will even help your search engine optimization, as well as be able to get you more credibility in the marketplace. So now let's talk about the website, because this is really key to move number 6, right? The website is really your conversion environment. And so turning just that attention really into what builds confidence. So the checklist here is making sure that above the fold is very clear. You've got plain language, very clear headline. The ticker symbol is there, and then 3 very quick proof points. From there, that one-click access or that one scroll to where the advisor or the investor can learn more, like the fact sheet. What is this ETF holding? How is this managed with through your methodology? And key stats that they will need to know. Is it turnover, or current AUM, or fees that they'll need to be able to assess, right? We don't want them hunting around for the essential information that they need. So again, the better product page should be easier for the visitor to use, whether it's the advisor or the investor. Again, this makes you easier to find, and investors deserve having that clarity and then not just looking for hype. It's interesting. One question that we sometimes get is, what should we stop doing in year number 1? Perhaps you've launched and you've looked at a few different channels, or you've been running quite a broad set of marketing tactics. So really what we would say is stop building a giant content machine before your story and page conversion turns into action, right? If your page isn't working, there really is no use in driving more and more to that product page. So making sure that product page is set for them to take action. If the story is fuzzy, if your page doesn't really convert or validate into action, then more content just creates more noise. In year 1, earn really the right to scale content by first nailing that core component of your path with clarity, capture the search intent that's out there, and then a page that makes it easy for them to confirm, is this a product that I want to invest in? And then from there, take action. Now, ETF marketing, again, as we've stated, isn't like e-commerce. So your job is not this perfect attribution. It's really directional truth. So when it comes to measurement, perhaps you might think of it as a ladder, right? And this is really keeping it simple and then also being able to defend the marketing actions and the marketing budget. So first, attention. Are you seeing qualified reach, in particular in search and in the growth of certain keywords? Are you getting frequency? As well, are you seeing engagement on your product page or on your site? Are you looking at engaged sessions, perhaps? Now, what about intent? Are you seeing that high intent search? Maybe in particular markets or just overall? Is there a trend or some sort of seasonality? And then are you getting those engaged visits? Now, when it comes to action, certain proxies of action, behaviors that suggest, okay, this is an activity or some action through a visit that's really ready for a trade. Are they hitting certain parts of the page? Are you getting to a certain scroll depth? Or are they going from a story on your site to the product page? And then maybe taking actions like copying the ticker. And then are you getting market signals? Are you starting to see flows? Are you starting to see volume? Perhaps that would be kind of a lagging indicator. It could also be a little bit noisy, but if you're seeing some odd lot trading, then you might be seeing active investors starting to take action. And two other micro signals that are probably worth tracking. I mentioned one, that's copying the ticker. If someone copies the ticker from your page, that's a pretty high intent, because they're probably the next thing they're going to do is either go to wherever they're doing more technical research or more fundamental research, or they're going to go straight into their app and perhaps make a trade. And then if it's possible to have like a compare tool, even amongst your own ETFs, if someone is going to use that tool to compare, a fund or alternatives, then that's definitely an action or an activity that's giving you further consideration. So really, when those signals rise together, you can really tell a credible story internally without pretending that the loop is closed. So one topic that sometimes comes up within marketers of ETF issuers is, what is kind of that sanity metric that you want CMOs to perhaps report on internally, or that you can use internally? And it's just that, really a ladder, or you can show it in a ladder from the search demand to the engaged visits to sort of those micro intent actions, and then some of the directional market signals that you're seeing. So if you want, what you could do is show them a ladder that reflects how decisions actually happen, right? Start with demand and qualified reach, when engaged visitors, and you get to then validate behavior, and then add those micro intent actions like copying the ticker, clicks on the fact sheet, or even other comparisons that may be made to other ETFs on your own site. And then finally, really connect to the directional market signals like that volume and that flows over time. So you may be asking yourself, or maybe if you only have to fix one thing this quarter, what would that be? So we would tell you, please fix the above the fold for clarity on your product page. And this would be a little perhaps clinic or an audit that you could do when it comes to your headline, right? The job to be done, right? Just very human language that's helps the visitor quickly understand what this product is about or how it might be able to solve their problem. Next, making sure that the ticker and that the strategy summary plus perhaps 3 differentiators above the fold. And then really that one click or that one scroll due diligence that they can quickly get to, like that fact sheet or the holdings, the methodology, or some of those key stats. And then lastly, tracking those micro intent moments, copies of the ticker, perhaps downloads of the fact sheet or other downloads of educational documents about that fund. And even if you're able to have some sort of comparison calculator on your site. Now, before we wrap up or before we close today, there's 3 things that I'd really make sure that you're watching from this past quarter and then maybe even to the next few weeks, because they really are going to affect how you message and where you place your bets. Active ETF momentum, right? We're seeing more launches and more flows. So keep an eye on those launches and the flows. And what you would need to do there is make sure that you're educating first and making sure that those messages are winning. An education first message is going to win when it comes to upcoming markets. Now, look at also at what we spoke of earlier, these conversions or structure changes that are taking place in the market. And this is going to be a long-term trend. Differentiation is really going to help shift from that new product to very clear and trusted messaging. And then lastly, these novelty products, right? The AI managed products that we're starting to see, alternatives, and then also leverage products are starting to drive more headlines. So for you, clarity and a calm, compliance, due diligence landscape, and really that'll become your competitive advantage, is making sure that things are clear and that the investor can invest with trust. Okay, so let's wrap up, right? Your job, again, isn't to control every trade. It's really to build a clear, repeatable path from awareness down to consideration to action, and measure, right, what you reasonably can. Hopefully, we've given you some credible ideas on what to measure. If you'd like to learn more, for sure, reach out to us. We're happy to engage and speak with you more about what might work there. And if you want, really help to pressure test your story or the landing page so that really your fund is easier to buy, hold, and recommend, send us your questions to ETF@zerocompany.com or visit zerocompany.com and submit a request through our contact form. And if you want us to, again, look at the page, submit it, we may feature it even in a future clinic if you're okay with that. So thanks for listening today. If you liked our show, please subscribe or send your questions to us. And for sure, share this with a peer CMO or marketer in the investment management space who really wants a saner way to grow your ETFs. Thanks so much, and we'll see you on the next episode.